make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand, especially yields. The most important thing is to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com.
Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network.
Oh, God.
Are you nuts?
The chart.
With your host, Phil Grande.
Good afternoon. Welcome to Phil's Gang podcast. All right. Do you know that this AI that everybody's all excited about is taking over the world? Is it really, really good for us? Now, in some ways it is. But it's not creating jobs. I mean, one day you'll be able to sit at your computer, just click on, and it'll do all your trades for you, and you never lose. So there's some good stuff. But jobs are not happening. And we need jobs. Because the middle class is the backbone of our economy. And if we don't have jobs, we're screwed. And we're losing more jobs. In fact, we just got a report. Let me see if I can find it. I had it this morning. The job report. Where was it, Willie? Let's see. The jobs that were lost. I think this is it here. No. I see if you can find that for me, Willie. Jobs report. But in the meantime, while he's looking for the job numbers this morning, look at this. AI. Remember, they're putting 1.5 trillion. That's the run rate of 1.5 trillion in investments. But look at this. If you go back and take a look, since 2022, there they are. Thanks. Since 2022 to today, the S&P's up 75%. 75%. That's wonderful, isn't it? But look at the jobs. Job openings are collapsing. Look at this right here. Collapsing while the stock market soars. It's because of AI. The stock market's soaring. We just got numbers today. UPS just dumped 48,000 people. Amazon, 30,000. Intel, 24,000. Nestle, everybody likes Nestle, especially in the fall. 16,000. Ford. Microsoft, Salesforce, Target, Kroger, everybody's dumping help because labor is your biggest cost. That's why we went out to outsourcing years ago in the 60s and the 70s. How'd that work out? Not well. Now, all of these companies, these AI stocks that we all own, take a look at the debt. Oracle, who just announced a few weeks ago their partnership in OpenAI, stock went up 25%. Look at the debt it's carrying due to equity ratios of direct AI stocks. Look at this. This is crazy. The debt to equity ratio in Oracle is 550%. What are you, totally nuts? And we'll take a look at Oracle stock in a moment. Now let's go down to IBM. This is all your AI group. Look at the debt. 200% debt to equity ratios. Apple, I didn't think they were borrowing this kind of money. Apple, 200% debt to equity. Are you nuts? Broadcom, one of our leaders, is insane. Same thing. 100% debt to equity. So we got all this debt they're piling on in AI. We're not creating jobs. The middle class, which is the cornerstone of our economy. Do you know that half of our nation, I'm talking about half of our population, is middle class? Middle class. Since 2008, they've been getting screwed. An average house was $217,000. It's now up 100% today, $215,000. How they doing with their wages? Well, their wages should be up 100% as well. No. Wages have increased only 42%, but house prices have increased 100%. What, are you nuts? This is crazy. Crazy. So all this AI, the hype is far larger than the results. Everybody who knows what's going on, the people who know what's going on, the smart money, say this thing is going to blow up because you can't, the investment that's going into these AI companies, so huge, but they're not getting any returns. And their debt, I just showed you the debt to equities, skyrocketing. I'm showing you people don't get, their wages aren't going up. It's not enough to cover inflation. This is nothing. They cut rates today a quarter point when inflation's at 3%? What are they, nuts? Why? Because he's trying to keep his job with Trump? 3%. And they cut? Their target's 2%. Who the hell came up with the target 2%? Why should it be just 0%? If that was my job, I'd say, you know what our target is for inflation? 0. Get out there and make it happen. This is horrible what's going on. You know why they're really getting screwed? Healthcare is killing us all. Obamacare is killing us. Obamacare is more than doubled. The only way you don't feel it is because the federal government is funding states. So if you're, let's say Obamacare went from $100 to $200, you still can get it for $100 because you and I who pay federal taxes, income tax, we are sending that money to the state. So if you're in Florida and Obamacare doubled to $400 a month from $200 a month, you don't notice that because you don't pay. You pay the $200. They don't jack you up to the $400 because those who pay federal income tax are paying for it, subsidizing it, sending the money to the states. What are you, nuts? That's insane. Why the hell do I want to do that? Why do I want to send my money to I don't know, Colorado or anywhere? This is really terrible what's going on. Terrible. Oh, by the way, before I forget about it, people keep asking me, what price do I buy gold at? What price do I buy GDX at? Remember, GDX was up, about 92%, I think, since April. Don't worry about the price. Don't worry about the price. You don't, I know everybody thinks, well, it reaches this price, buy. It reaches this price, buy. That's why 90% of people lose money in the stock market. Okay? But I'll talk about that in a moment. What do pros do? When stocks pull back, like our GDX pulled back. Remember, our GDX was up 182%, pulled back 20%. And people were asking, okay, when do we get back into the minors? What price? And I tell them, you don't base it on price. You base it on when you see the buy signal. The price doesn't mean anything. It's the buy signal. I'll get into that in a moment. I want to make sure I don't get off track here. So inflation, okay, is a killer, as I told you. Think about it. Housing's up 100%. Wages are up 42%. That doesn't work. Now, inflation, like I said a moment ago, which really made me grumpy when I heard, well, inflation, it's down now. No, it's not. It was a lie. When we got our inflation number the other day, inflation was up from September 2024 to September 2025. It was up about a tenth. I know it's not a lot, but it was up. But then the stock market, all of a sudden, you're watching the stock market, boom, S&P, another all-time new high. Well, wait a minute. Inflation's up. Oh, no, don't worry about that because we went from 2%, okay, to 3%, but we thought it was going to come in at 3.4%. So because it came in at 3 instead of 3.4, even though it's higher than September 2024, it doesn't matter. It came in lower than our estimate. What the hell are you talking about? This is the game plan that goes on to mask all this crap. Now, rent. Rent hasn't come down. Rent hasn't come down. What are you, nuts? Rent is insane. Here in Sarasota, it's nuts. It's robbery. So rent is still up 42% since 2008. Wages, yeah, people aren't making enough in hourly wages, okay, to cover all this stuff. So when you hear this is the best economy ever, and we have more jobs than we ever had before, it's not true. 18 to 34, 33% in that age group, mostly really if you break it down, people who are between 25 and 35. 33% of that age group still living with their parents. Are you nuts? This is crazy. Who would ever think that someone's 35 years old, 38 years, still living with mommy and daddy? But they have no choice. Are they going to live on the street, be homeless? They're probably better off, especially if you go to California, because they're going to give you everything. They're going to give you a car, they're going to give you a hotel room free, food free, everything free. What a dumb state that is. A beautiful state. Isn't it a beautiful state? And they got idiots running it. Well, anyways, I don't get political.
3 minutes.
So, the gap. I talked about this before. Housing gaps. Insane. It's insane. The housing gap's increased by 42%, meaning between what people make for wages and you know what it costs for a house, the gap keeps expanding. Here, listen to this. Then we get these lies. Listen to this.
This consumer resilience and this underlying business resilience aspect is at work and showing through pretty clear in the Q3 results thus far.
That's a lie. Consumer resilient? How is he resilient? Would someone show me where the consumer is resilient? I don't see that. Are you kidding? When the top 10% own 93% or 43 trillion of the total wealth of stock that's at 47, the top 1% owns 25 trillion of the total stock value of 47. You want to know what the middle class owns or how much their wealth went up?
That's 2 minutes.
$335. $335. What are you, nuts? Bankruptcies up 48%. That's the small businesses. Main Street's up over 25% now. Listen to this.
And then there's the question of growth. Okay, so it's a real bet on growth. So you can understand that the policy is to make sure you have enough growth, try to get growth, and then also to try to then lower interest rates. Because not only do lower interest rates tend to stimulate growth and stimulate asset prices.
Wait a minute. Boy, that drives me nuts. When you cut rates, inflation goes up. Our inflation's at 3%. They said their target's at 2%. This guy's telling you, listen again to what he's saying. This is all BS.
And then there's the question of growth.
Yeah.
Okay, so it's a real bet on growth. So you can understand that the policy is to make sure you have enough growth, try to get growth, and then also to...
All right, here's why they don't get growth. Why our growth is stagnant. Because of that stupid QE and stupid stock buybacks. Because with stock buybacks, CEOs can drive the stock price up on their stock from $20 to $120, but without any sales, without any additional sales. Can you believe that? Because of stock buybacks. When they buy their own shares back, instead of having 100,000 shares out there in the market to be sold and bought, let's say they got 50,000. That drives the price of the stock up. Crazy. We'll be back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone, learn off of them, one-on-one. Now that can be really expensive, cost thousands of dollars. But I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro. Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And welcome back. Okay. I'm going to play some cuts here. And listen to these cuts. How they contradict.
If you look at the underlying for how people are thinking about income and growth and job growth going forward, there really is a bit of a split where there's more people expecting higher job growth and more people expecting lower job growth, and it nets out in a really odd way.
And then there's the question of growth. Okay, so it's a real bet on growth. So you can understand that the policy is to make sure you have enough growth, try to get growth, and then also to try to then lower interest rates. Because not only do lower interest rates tend to stimulate growth and stimulate asset prices.
Lower
but they
cost.
have the effect of lowering the cost of debt service.
Unbelievable.
The higher income consumer is really fueling what we see as continued momentum in the overall broader landscape for consumer spending.
Well, that's not true. Here's why. Our economy has always been driven by the middle class. The person who makes the family income is about 65, 75,000, couple kids. If you can keep inflation down, they're fine. And as long as you get rid of stock buybacks, we'll get wages back up. The reason you're not seeing increases in wages overall is because what happens is we used to be a country that produced productivity. We were proud of that, no more. So all the investment used to go into, or money, into business investment. You'd buy new machinery, equipment, a lot of IT spending. That's gone. Why would a company, and by the way, and so let's stay in that thought for a minute. So everybody would do business investment. That would then create more productivity. So if you're making 100 chairs an hour, you're now making 200 chairs an hour. That's productivity. That's good. And a responsible company making that difference in money will take that money and give it, because they earned it, to the employees by raises and bonuses. They take that money and they go out and they buy. That's good for the economy. But here's the other part. The company with all that money starts hiring. One job makes 3 jobs in your city. One job creates 3 jobs. Take construction, which, by the way, everybody's lying to us how great the economy is. Yeah, think so? Then how come spending, construction spending, is collapsing? That's where our big jobs are. When a person's building a house or a person's building a commercial building, every new employee they hire, whether it's a house or whether it's a factory they're building or commercial property, equals 5 jobs in your town. So let's just say 3 to 5, okay? Because when you hire somebody and he's working at your site and you have that money, after work you go down and you go to the dry cleaner. So you go and you buy some shoes or whatever. Then the guy that works in the shoe store, he gets a raise, and it just keeps going on and on and on. That's been taken all away from us. There's no more business investment. AI, I just showed you the proof. Jobs are being cut because of AI. AI is killing jobs. But it used to be when factories produced, it'd be a beautiful thing. Because the more we produced, the more business investment, the more new machinery, the new buildings. All of a sudden you're building 100 chairs. Now you're building 200. Now you're building 300. And the company's making more and more and more money. And a wise company shares that with their people. Give them good benefits, dental, all that. But that's not happening today. It's not happening. Everything today is, let's cut labor. Let's cut labor. You know that. Let's cut labor. We have more jobs going from full-time to part-time to no time. But they won't tell you that. They won't tell you that. Now, the Federal Reserve, okay, we had this cut today, 25 basis points. Are they nuts when inflation targets 2% and our inflation's at 3%? Give me a break. So, again, stagnant wage growth is killing us. when paychecks don't keep up, and especially if there is productivity. And remember, the companies today, when there is productivity, they don't share anymore like they used to. No, they don't. They do stock buybacks. Stock buybacks is one of the worst things that ever happened because you get a false view of the economy because you see the stock market every day, new highs, new highs, new highs every day. But it's a handful of stocks. I told you last week, they've been lying to us about the S&P 500. Only 10 stocks have earnings. 490 do not have earnings. The big thing that's killing people is rising housing costs. The dream of your first home, starter home, is gone. Gone. Who would ever think of that? Gone. What are you, nuts? That's insane. Consumers, they're not making it. They're not making money in stocks. The middle class doesn't make money in stocks. Oh, they make a little in their 401k, but that's nothing. Here, listen to this. I want to get this one.
NASDAQ was up 86% in 1999, and then it started 2000 up 24% in just over 2 months. Obviously, the hangover on the other side was terrible, but you made a lot of money just sort of staying with it as long as you had investors believing everybody's going to win.
That's not how it works, though. Not everybody wins, right? Now listen to this about productivity.
I think the market being at 6,700 isn't a coincidence. I think you have an alignment of productivity, an alignment of policy, and I think that we see that continuing to go forward.
What the hell does that mean? Listen to what he says. What the hell?
I think the market being at 6,700 isn't a coincidence. I think you have an alignment of productivity, an alignment of policy.
What's that mean? An alignment? It's not my car. You're talking about the two tires of the cars are going the wrong way or something? An alignment. That's their tires, right? This guy's talking about what?
I think the market being at 6,700 isn't a coincidence. I think you have an alignment of productivity, an alignment of policy, and I think that we see that continuing to go forward.
What the hell does that mean? Unbelievable. The reason the stock market is where it is today is not because of productivity. No more. Stock market doesn't go up on productivity. Stock market only goes up on stock buybacks. Or, AI. These people are insane, but they're investing because it's not their money. They're investing hundreds and hundreds of billions of dollars into something they're not getting returns on, into something that's not helping the middle class. You wipe out the middle class, you're screwed. That's why this communist, Bellamy head, I think his name is, in New York City, Mahami Chamami, I guess, Hot Tamami, whatever the hell his name is, that commie, he's a commie. Do you know why they're going to put him in office? Because of what's been going on. When you hear that, hey, I'm going to take care of this, no more you going to get screwed. No more the house prices have gone up 100% on you, but your wages are up only 42%. So your wages increased 42%, but your house price increased 100%. Guess what? I'm a communist. What we're going to do is make sure nobody's going to do that to you again. So what we're going to do is take the homes away from everybody. And what we're going to do is just make it housing. We're all going to share. We're all going to share. And we're going to take all the condominiums in New York. If you're a millionaire, we're going to boot your butt out. And we're going to make it public housing. This is the crap that's going. But why has this happened? Because the greed on Wall Street. Once we started down this road of stock buybacks, it screwed everything up for the middle class. It's like knocking our globe off the axis. The gap right now between rising costs and these stagnant wages has created such a problem. And the problem is this mommy communist in New York. And there she is. Who's that? What's that girl's name? What the hell's her name? She's a big mouth. No, she's so dumb. Her brain's about the size of an ice cube. What's her name, Willie? Everybody knows her. She's one of the 5 witches. I can't think of her name. Who?
Elizabeth Warren?
No, she's. Anyways, she's sitting there, standing there, and she's campaigning with Salami, and then she's there, and then Bernie Sanders comes in. AOC, that's who it is. AOC. So AOC is a communist. Bernie Sanders is a communist. They're all joining together, and they're going to take everybody who makes money away from them. And they're going to put rent control in. Boy, that's going to work. Do you see what happened the last time they put rent control in? Are you out of your mind? Are you nuts? They're going to put rent control back in. And they're going to take the condominiums away from the wealthy and make public housing out of them. This is what this guy's going to do. And that all occurred, it all started in the colleges. Like AOC, when she went to college. By then, we have more communist professors in our colleges than ever before. It started in the 50s and the 60s, but you only had maybe about 10% Marxist professors. Now you got about 90% Marxist professors. And when you start telling people, I can fix this for you, we're going to give you free food. You don't have to pay to go on the subway. You don't have to pay to go on a bus. You don't have to pay to buy food. We're going to give you free food. People fall for that because they don't know how the economy works. That never works. Never works. But going back to the stock market, I don't want to get off into politics. Going back to the stock market, the thing you got to learn is stop worrying about what price I should buy something at. There's 5 specific buy signals. Trust those buy signals. They're never wrong. And there's also what they call a sweet spot. It's never wrong.
1 minute.
Never is it wrong. And I'm going to show you, if you don't know what I mean. Let's see if I can find the one with, let me see if I can find it here. Here it is, right here. So again, you don't care about the price. Don't think about price, what price I should buy. See, they burned your brain with, oh man, when the price, if the stock goes from 90, okay, down to 50, you start buying at 50, man. Jump in and start buying at 50, right? First of all, no. Because when a stock goes from 90 to 50, you got all these people who lost money and are holding on. Now, when you start buying it and you try to get up through there from 50 to 90, you got all sellers above you. Every time you gain, bang, you get pushed back down. You gain, boom, you get pushed back down. I'm not telling you not to buy stocks, because we always buy a lot of stocks, okay, when we have a sweet spot. But you're always better off, instead of fighting these people, is buy right at the top. As long as you got momentum on your side. Momentum. You need volume. All right. So we ran out of time today. I wish I could show you this chart. It's called the sweet spot chart. You always make money, never not make money with it. We'll do it again tomorrow, okay? All right. So we'll see you on the charts.
877-600-4264. That's 877-600-4264.